$100 million deal win. It was a net new communication deal, and this is the biggest order that they've seen in the last 3.5 years. And secondly, the window is now open for the company to announce a buyback. The last one, I think, closed towards the end of June. So there is a potential of a buyback. So these are the two reasons why CLSA is bullish. But secondly, brokerages are on the whole expecting a pickup in growth rate. We did a very quick poll of, Kotak, UBS, CLSA and Ambit. So it's not a very comprehensive poll as of now. We'll get to that closer to the numbers. But you can see that, the street is expecting a pickup. Infy is likely to lead with a 2.5% growth rate. For Wipro, after 5 quarters of a revenue decline, this time it could be a flat performance. Now this pickup in growth rate could be led by 1, June is a seasonally strong quarter, 2, large deal ramp-up execution of that, and 3, according to Kotak, a reducing intensity of cuts in discretionary programs. Also, the fact that the guidance is going to be stable this time, no further cuts in the guidance, will also be read positively. So consensus is that, HCL Tech, Infy, the ones who give you an annual guidance are likely to hold on to it, similar to what Accenture did. The stocks are seeing a lot of interest. Now, IT was a laggard. I think till May, we had seen a lot of brokerage downgrades. We had seen EPS estimates getting cut, PED rating. But now, with the momentum in the month of June, when the Nifty IT index has gone up nearly 14-15%, we've seen the Nifty IT index turn positive and show you a gain of close to about 4-4.5%. That said, the valuations are now at a premium given the recent rally. So ISEC says the Nifty IT index is trading at 27 times forward multiple, a 32% premium to the Nifty 50, much higher than the average premium that it trades at. Sudeep, the price action today, the top gainers were Tech Mahindra and Wipro. And these are the two stocks where the valuations are reasonable versus peers. Is that the market's tilt, that go for the ones which have underperformed, where there is room for scope? Or do you think it's still too early to bet on a Wipro and a Tech Mahindra?
Well, Wipro is one stock which we have been watching very carefully. And, the deal win which they had announced, I think last month, was really good. And after quite some time coming from Wipro, a deal win of such a magnitude. And of course, this buyback thing is very much on the radar of the market, and they're expecting some excitement there as well. So considering everything, I think Wipro definitely looks like a good bet. Of course, you have to be a little aggressive investor to take that bet because it may or may not work out. But I think Wipro, if you're an aggressive investor, it's a good bet at current levels. Of course, today the upgrade has come, price has moved up, but still it does look good. HCL Tech has also potential to go up. And yes, valuation-wise, it is relatively attractive compared to its peers. And one can look at that. But if I have to pick up, one of the other stocks, I think I'll go for Infy because we are expecting a much better quarter from Infy. Probably one of the best quarters from Infy compared to the other large cap IT companies.
Okay, got that. Well, hang on, Sudeep. Let's get to this first stock of the day then. PVR, it surged nearly 5% in trade. This after the movie Kalki recorded a strong box office collection over the weekend, becoming 2024's highest grossing film in only 3 days. Vamakshi is on top of that. She joins us to fill us in with a quick analysis. Vamakshi.
Well, absolutely. It was a blockbuster weekend for the movie Kalki, and it turns out that it happened to be a blockbuster Monday for PVR INOX as well. Kalki did become 2024's highest grossing Indian film in only 3 days. In fact, total net India box office revenue for the film stood at 302 crores as per a note from Novama. Apart from that, the content pipeline going forward looks quite healthy, and this has come in after 7 lackluster months of, there weren't many releases that were coming through. And in fact, going forward, there are a lot of releases that the audiences will be watching out for, both from Bollywood, regional cinema as well as Hollywood, and that is because Hollywood content is now finally seeing a comeback after settlement of writers' strike last year. But apart from that, some other triggers include that the ad revenue, according to the company, is expected to reach pre-COVID level on an absolute basis by FY25. The company's cost initiatives could also bear fruit over the medium term. They are also working towards reducing that debt. They aim to be debt-free over the next couple of years. They've got a large land bank of nearly 300 to 400 crores, which they are expected expecting to monetize in order to bring down debt. Premiumization of portfolio is another factor that is driving the stock, and that is because it has better margins. They're expecting to raise the premium portfolio from 14% to 20%, so that again bodes well. Overall, brokerages too are very optimistic. Nuvama and MK both have a buy, with the Nuvama's target price is at 1,995, while that for MK is at 1,650 per share.
Shilpa, do you expect PVR to play a bit of a catch-up? Because year to date, PVR has been an underperformer and it's down 10%.
Yes, but if you look at the data, 1540 zones, it acts as a resistance, time and again. So till we don't sustain above 1540, there's not much of an upside that we can talk about. But however, if it does, then the levels of 1700 cannot be ruled out as well. But for now, one should just wait and watch. This 1540 is, at least breached decisively.
Right. Well, got that, Shilpa. Sudeep, what about you? Have you watched the film?
Well, Nigel, I haven't yet watched the film. This weekend,
tell us about the stock then.
Cricket and football. Well,
yeah.
As far as the stock is concerned, I think I'll be a bit cautious. We have seen hardly any good release and hardly any good news as far as PVR is concerned for the last 3-4 months. I'll wait and watch. Kalki, of course, brings cheer back there, but I'll wait and watch about the new releases and the excitement. Of course, the corporate action around selling the land bank can create temporary excitement around the stock. But fundamentally, I'll wait and watch for some more time before I take a call. And as things stand today, I don't think I will recommend a buy.
Okay. Indus Stars was also a big mover today. In fact, Indus Stars is up for the 6th day in a row. In 1 month, it's up 10%, and this year the stock has practically doubled. Now, some of the key reasons why Indus Stars has been a big beneficiary of all the telecom-related news flow. One, Indus Stars is a B2B player. All the other companies, the operators are B2C, and B2C is where the competitive pressure intensity is a lot higher. Now, Indus Stars is also a beneficiary of the improvement in the financial health of any operator, particularly a Vodafone Idea. So, according to an IFL old note, it came out in April, that when Vodafone Idea starts spending on its capex, Indus Stars could garner nearly 80% market share. So, whenever there is an increase in the location count, Indus Stars would be a beneficiary. Also, because of the trouble surrounding Vodafone Idea, there were a lot of receivables owed by Vodafone Idea to Indus, which will now get cleared, and therefore the hope is that Indus Stars will go back to paying a dividend to its shareholders, and finally the stock is trading at a discount to global peers. So that's another added factor. Sudeep, Indus Stars, people like the story. It's gone through a long period of pain in 2023, in the beginning of 2024, and now things have turned around. But is it all in the price, according to you?
Well, I think there is still scope for excitement back in Indus Tower. The fact that it quotes at a significant discount to global peers is something which we should note. And on the sheer facts that Vodafone expansion is bound to happen. They need to expand their 4G and 5G offerings. They need to gain customers, and that will definitely help Indus Tower in a big way. Also, the clearing of the receivable does help Indus Towers. So these are real tangible benefits which Indus Tower will get. And at some point of time, with these happening, the valuation catch-up also will happen. So, for a long-term investor's point of view, there's absolutely no harm in buying Indus Tower. And remember, the operators may change, operators may flourish or flounder, but the tower companies, as long as they can collect the receivables, they should keep growing.
Okay, all right. Well, that's about Indus Stars. One of the big movers actually post the clear out of that large trade. The stock has given close to around 15% returns, all this in a matter of under 2 weeks. Well, let's focus on the other space then that was in focus, auto sales numbers. Well, companies, they have started reporting their numbers for the month of June. Maruti, well, they reported numbers to 12% rise in their sales numbers as compared to the same month last year. Bajaj Auto, Mahindra & Mahindra, Eicher Motors, all of them as well reported improved sales performance. While Escorts Kubota as well as Ashok Leyland, they saw a bit of a dip in the June sales numbers. Sonia joins us to run us through the fine print. Sonia, take it away.
Well, thanks a lot for that. So, it's been a mixed bag for the auto sector this time. So, we're getting a lot of the numbers thick and fast. Let me take you through some of them. For Bajaj Auto, actually, the sales growth was better than what the muted expectations were. So, we saw barely a 5% growth for Bajaj Auto, and this was because the two-wheeler exports continue to see pressure because pockets like Nigeria, Egypt, etc. continue to struggle a little bit with growth. So domestic sales were up 8%, but export sales were up only 1%. Moving on to Escorts Kubota, the weakness continues in the month of June. Company says that a delayed pickup in the retail season impacted sales this time, and the June total sales are down 2.6% on a year-on-year basis. Let's move to M&M, which was a mixed bag this time. Auto sales saw double-digit growth, 11%. SUV sales were strong with a growth of 23%, while tractors continue to be in single digits, up just about 6%. The company says that retail momentum has definitely picked up, supported by land preparation and an increase in Kharif crop sowing. Maruti has also come out with their numbers. Now there the auto sales are looking strong and they are higher than what the street was estimating. Total sales growth of 12.5% year-on-year for Maruti, coming in at 1.79 lakh units. Now this is because of a strong jump in export sales for Maruti. So if you look at it, exports are up 57% year-on-year, coming in at 31,033 units. Domestic sales are largely quiet, but it's a pickup in exports which the street will definitely like. And finally, you also have Ashok Leyland, where the total sales are down about 2%. Medium and heavy commercial vehicle sales are down 4%. LCV sales are up just about 3%. So commercial vehicles are slightly on in the slow lane right now, but passenger vehicles like Maruti doing very well. Back to you.
Sonia, thank you very much for that. Sudeep, your preferred pick in the auto pack?
Well, I was liking Bajaj Auto all this while, but I think slowing down of export is a matter of concern. So I will refrain from recommending that at this stage. I also like Mahindra and Mahindra, and I'll continue to bet on that. There has been significant run-up in price as far as Mahindra and Mahindra is concerned, but I strongly believe that tractor sales pick up as well as other farm equipment sales pick up on the back of good monsoon can further take Mahindra and Mahindra up. So I will continue to bat for Mahindra and Mahindra.
Okay, gentlemen, thank you very much for joining in. Sudeep and Shilpa, we need to slip into a very short break. On the other side, we'll get you the top corporate voices and the key market events to watch. Stay tuned.
Tata AC